Hello everyone, this is your host Vaibhav. In today's session of Daily Stock, we are going to talk about the biopharmaceutical company Bristol Myers Squibb, which has been in the decline, and by decline I mean particularly in its share price for a while now. And after the fourth quarter earnings, there was some consolidation on the lower side for last couple of weeks. We haven't seen any major move on the downside after the earnings report. It initially gained and now is on giving up on the move to give up all those gains, but it is now in a phase where it is finding support on the lower side, but the momentum is still bearish. It is yet to make a convincing turnaround, and that means that we will have to be cautious if you are looking for any investment opportunity from the longer term. Now we are going to look at its earnings report to see what are the reasons, what are the issues which are pulling the Bristol Myers Squibb down. And if you consider the earnings report talk about a lot of positive things. Revenues have stopped declining the way it were a couple of quarters back. Now there is decline, but not of fast-paced nature. For the full year, the revenues are still on the lower side in comparison to the 2022. But if you consider the guidance, the outlook for the fiscal year 2024, there is expectation of low single-digit growth, and that is something to take heart from. But why this is happening? I feel mainly because the Bristol Myers Squibb has failed to generate any major breakthrough in the medicinal space for a while now, and its earlier products are now losing out of the steam, and as the sales stagnate and in some cases the sales even on the decline, we are going to have the investors confidence shaken, and that has been detrimental to the valuations of the Bristol Myers Squibb, which has lost around more than 50 percentage point. Not 50%, I think it is around 30% of its valuation from the peak of recent year, not long back, around 2022. In comparison, we are talking about. Let us delve deeper into the earnings report. For the fourth quarter, the revenue stood at $11.5 billion, with the EPS coming at $0.87, and the non-GAAP EPS of 0. Not 0 point, it is $1.7 per share. In line and new product portfolio, revenue increase of 9% to $9.8 billion, and the full year revenue stood at $45.0 billion, with the EPS of $3.86 and non-GAAP EPS of $7.51. It has also embarked on multiple mergers and acquisitions, where it is acquiring the Karuna Therapeutics, the Rise Bio, and also a strategic collaboration with System Union has been listed. It has also completed the purchase of Mirati Therapeutics. The guidance for 2024 says that the non-GAAP EPS is likely to be in the range of $7.1 to $7.4, which is not very different. It is slightly on the lower side in comparison to the non-GAAP EPS of $7.51 for the fiscal year 2023. Now, in the fiscal year 2024, the company is expecting slight decline in the EPS for the whole year, and that is going to be concerning for any investor who is looking to buy and hold the shares. Because if the revenues are on the lower side, if the net profit is on the lower side, if the earning per share is going to be on the lower side, there is not much of a chance the company's valuation will keep going up, and not in the defensive segment particularly, because the pharma space is a defensive play. Here, the investors go for safety and stability, but still, some sort of growth is a requirement for the rising valuations, some sort of gain in the market share. More sales, more profit means that the company is keeping up with the competition and is also beating the competition in some case. So that sort of performance is required for the stock price valuation to be on the growing side. Let us go to the consolidated earning statement. Here is the earning statement for the quarter ended December 31st, 2023. In it, you can see that there is not much of a difference for the quarterly revenues of the fiscal year 2023 and 22nd. There is around 70 million increase, but that's insignificant from the statistical point of view. The net product sales are up by around 100 million. But if you look at the cost of products sold, then there has been increase in total expenses, and that has reduced its net earnings for the fourth quarter, which are down by around 300 million from US dollar 2.025 billion to now 1.76 billion, and that is also pointed to the rising cost of business for the company, and in that sense the things are in the worst shape because the revenues are stagnant to declining, and then there is this lower efficiency in the running of the business, and that is a major negative, and that has been reflected in the price performance, the stock price performance of the by in the share price for the Bristol Myers Squibb. Here we have these EPS, these gap EPS. Now we are not really going into the each product wise revenue detail. That will be taking too long time, and we don't have the time to go into the every detail. For the detailed analysis of this quarterly report, you can simply download it from the investor relations page of the Bristol Myers Squibb, and there you can go into the fine print and see how things have been shaping up for the company, and then using these highlights you can plan about your trading and investing decisions. Now we are going to look at the technical side of the story. For the BMY, the Bristol Myers Squibb share price, it has been a roller coaster drive for last few weeks. After the release of its earnings report, it gained ground. It rallied from US dollar 48 level to almost US dollar 55, and from there on it has moved sharply. First it lost 10%, then it gained, and then again it lost in last couple of sessions, and it is hovering around US dollar 50 mark for last two sessions. In this kind of environment, I feel that going long is not going to be a prudent choice. Rather than that, we will have to go with the flow. We will have to keep in mind that the earnings are lacking in growth, and being a defensive play, it is not going to be a momentum stock either. It is not a growth stock either. And in such a kind of environment, it is better to concentrate on the short selling trades wherever possible. So if you get any promising opportunity to go short, then adapting a sell on rally approach is going to be quite rewarding exercise. So for that, I feel if you're a short-term trader and investor, keep in mind the price for next few sessions. If it keeps on the lower side and hovering in the range of 50 to 52 while not rising much, I feel that in the second half of this week we can indeed look for the new short selling opportunity and expect the stock price of the Bristol Myers Squibb to decline further below 50 gradually. So there is the possibility of it continuing to remain bearish, and we can take advantage of that while looking for sell on rally approach. In the medium term, the things are not going to be very different. Here also, after finding some support around the price level of 47, it did gain around 15 percentage point, but on the higher side, now it seems to be struggling. And in this case, if it remains this way, remains sideways while consolidating with slightly bearish tilt, I think we can indeed go for a short sell trade. Now the price to watch out for in this scenario is going to be its immediate swing high of 55. So as long as it doesn't really cross above that, I will feel confident for short sale trades. So the thing to do is watch out for its price action. Here also, sell on rally is the approach to work with, and if there is some move on the higher side, anywhere between 52 and 53, keep a close watch. And as I said, as long as it doesn't really move past the 55, we are in the game to short it. And there has been a prior rally also. Now it might be the time to short sell for a new phase of bearishness. So keeping that in mind, all we need is a good risk reward ratio, and it is going to be a good idea to short it as close as possible to the 55. And for that, we will have to keep these share price action under the watch, and as and when we get the opportunity after a slight rise and consolidation on the higher side, close to 52, 53, 54, as long as it is below 55, I will be agreeable to fresh short sell. On the weekly side, there has been this continuous decline, continuous slide to the lower side, and it has lost, as I said earlier, also more than 30% point of its valuation from the recent peak, and even on these lower levels, it has been found much support from the buyers, from the investors to go long, and things are not looking that bright to buy it on on the current levels. So for a new trade, it is going to be a bit difficult from the longer term because there is not much of an buying opportunity. Nor there is a great selling opportunity because there has been this sharp decline already in place, and now it is seemingly in a consolidation phase So unless we get a fresh sell on rally kind of opportunity after due consolidation, it is not going to be a good idea from the point of view of risk reward ratio as well. So for a few weeks, keep an eye on the price action, but don't really get involved. And if it consolidates and spends time in this price band of 50 to 60, then maybe after a while we might think about going for a short sale trade if the momentum remains bearish, if it doesn't really rise much beyond 60 or thereabout in next few weeks. And in that eventuality we can indeed look for short selling opportunity, but the time to short it from the longer term is yet to come, and we will have to go for the trade in a prudent way so as to make sure that in the eventuality of we getting things wrong, we don't want to lose too much money. So that's all from my side for today's session. If you have any query or any idea to share, write to me in the feedback, and I would be more than happy to take this discussion forward. Thank you all for joining in. Have a fabulous day ahead. See you next time around. Till then.